About cyber insurance and what the nature of the market is here as we're going into the third quarter of 2023. We're talking about claims and also what's available for coverages and what you should look out for with some exclusions from coverage, what is not covered. And here's from the Wall Street Journal quarterly cyber insurance update from August. Premiums are declining. We're seeing that with our clients. Many quotes we're doing and packages we're doing, we're seeing a lower quote structure for similar size companies. You're also looking at directors facing insurance risk because the SEC is requiring that companies have a certain cyber defense plan in place and also notifications to shareholders. Um, Here's the big thing: the insurance companies are using AI to develop risk profiles, and this is why premiums are going down. What they're able to do is look at the risk of the company and help mitigate it before they even write the policy. For example, if you do a quote package with an insurer, what they're going to do is they're going to actually put a profile on your business to see how secure you are. And if you're not secure, that's a good thing because they'll help you patch some of those holes in your system. And that's an important thing because this is sponsored by Coalition, by the way. If you ever see that company, Coalition, they're a very good cyber insurance company for certain types of coverages. This is from a tech publication that says one unpatched vulnerability increases the risk of a cyber claim by 33%. So what these insurers are doing is they're using AI to find those unpatched holes and other things to do the underwriting and get companies into good insurers, right? But it doesn't completely eliminate all risk. Here's Kroll. If anybody hasn't heard of Kroll, Kroll is one of the largest investigative security companies in the country. They are a risk and financial advisory solutions provider. That's what they're called. But really, they do all kinds of cybersecurity, cyber prevention. They fell victim to a data breach, basically a cyber hack. And what happened is they had an employee that had a SIM swap. Now, this is pretty sophisticated. The hacker pretty much had to know what they were doing to do this, but it just goes to show that even with the highest level of defense, you may still have these types of losses. So you want to make sure that in addition to having good IT cyber prevention, you also get some resources behind you with a cyber policy. How do you get the most from that policy? Well, the most important thing is understanding what the policy covers to make sure that it covers what you want, but you're not paying for things you don't want it to cover. Cyber policies are different than many other types of insurance because there's a lot of different options: first party, third party, tailing coverage. You want to make sure it covers what you want. So you can talk to your agent about that. But here's the big thing: take full advantage of any tools you may get from your insurer, like security assessments, like we talked about, breach counseling. Here's the thing: cyber insurance is different than most types of insurance. If you buy fire insurance from an insurance company, they're not going to send out a fire marshal to look at your building every day to see if you have a fire risk. A cyber insurance company many times will do proactive monitoring of your system to see if there are any risk and if the risk change. Remember, they're seeing all the losses that occur across all of their insured customer base, all the policyholders. They're not just seeing your company, they're seeing all the companies. So when they see attacks and threats to all these other companies, they can now say, wait a minute, let's see if any other our insureds have these same attacks happening, and they can prevent them in real time. Also, they recommend incorporating the claims process into their cyber insurance plan. Here's why. If you have a cyber event that starts to happen, if you notify your insurer, they're not there just to pay a claim. They're also there to prevent the loss from accelerating. So if you notify them, they have most cases a response team that'll step in to try to help avoid that loss in the first place. One last thing, we'll talk about an industry that's really, really at risk. And this article comes from a publication that is in the wealth management industry. Look at the top here. It's wealthmanagement.com is the website. They are a resource for high net worth and affluent type family offices, financial management offices, and digital fraud is a growing threat to advisors who are on their own when it comes to buying coverage for their risk. Here's the thing. Most wealth management offices don't have a cyber IT department, right? They're kind of, even though they're technical, they don't really think like they're a computer company. Here's an example. An advisor that this person worked for met with a client. The client told the advisor he had just purchased a home and needs help sending $300,000 to the real estate escrow company. Advisor made the arrangements, transfer the funds, and the funds never got there. Escrow company says, I don't know what you're talking about. The client had fallen prey to a sophisticated social engineering scam. We've talked about this before. So it doesn't matter what business you're in. Anytime you're dealing with large source of funds, which everybody is, you have accounts payable, accounts receivable, you're transferring money from different accounts. Those are places that a cyber attack can take place, and you want to have good practices in place. It doesn't matter what business you're in, what industry you're in. We have a lot of clients that are general contractors who think, well, I'm not really a tech company. I don't need cyber insurance. Well, think about it. You're dealing with architects, escrow companies, builder or realtors. Somebody can break into your system to access theirs. So you don't have to be the primary source of the funds. All they got to do is get into your system, get an email address, hack your email, and start sending emails to, let's say, the realtor to tell them to transfer money somewhere else. And even though you didn't lose money, if the attack came through your company, you could have some liability because the attack came through your company. And that's where third-party liability is important to look at. I know you have opinions about this. Let us know in the comments what you think about the cyber risk to your company. Have you had any kind of claims or events that have happened like this that you know of, or maybe you have a colleague? Cyber coverage and cyber risk is the fastest growing type of losses we're seeing with small and medium-sized companies.